Hello, I want to teach as many U.S. business owners, U.S. entrepreneurs, U.S. franchise owners, and 1099 income earners how they can save federal and state income taxes legally with this business spendthrift trust. It's legal. It's in the IRS Tax Code 643B. My name is Sally Gimmon, and on April 4th, 2020, my CPA called me to say congratulations. I had made so much money in 2019. My personal tax bracket went from 22% to 24%, and all of a sudden, I owed $94,000 in taxes. Remember, this is the start of COVID. I had nothing coming in, and I told my CPA I only had $50,000 saved. His solution was to set up an appointment with him, get on a payment plan, pay interest and penalties, and that was all he could help me with. I went to bed crying that night. A fantastic book to read is The Power of Your Subconscious Mind by Joseph Murphy. It's a little bit old, it's from the 1930s, but his entire thesis is put an idea into your head and sleep on it, and you'll come up with a solution. April 5th, I wake up and I know I'm going to get a HELOC off of a paid off house. And I knew I had read an article about the Rockefellers Spendthrift Trust. It's called The Office a few months ago. And I started researching the Rockefeller Spendthrift Trust. It took me 5 months, but in September of 2020, I started both my business and beneficial spendthrift trust and started teaching in my Phoenix real estate group for 18 months how other investors could stop paying capital gains when they sold something at a profit, stop paying interest income taxes if they were a passive investor, stop paying dividend income taxes if they're in the stock market, stop paying rental income taxes if they're a real estate investor, and stop paying royalty income taxes if they have talent or NFTs. That's the beneficial trust. Here, I'm talking about the business trust. This is for all U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and 1099 income earners. You will stop paying federal and state income taxes year after year, generation after generation. You're going to keep your information 100% private. This is on the federal level, and LLCs, S Corps, and C Corps are state level. Anyone can go online to the Secretary of State or the Corporation Commission of your state and research your LLC, S Corp, or C Corp by its name or your name, and they get all the information. It's public domain. Third way you're going to save, talking about all lawsuits. All lawsuits become frivolous and go away. And the fourth way, if you're on Medicare, it stops the IRMA surcharge on Parts B and D of Medicare. I tell people if they're making at least $100,000 in 1099 income, I can guarantee no matter where you live in the United States, you will save 5 figures in taxes. 7 states, Florida, Texas, Tennessee, South Dakota, do not have state income taxes. Other states, like today's example, New York, my client was paying 10.9% in state income taxes. This is kind of a fun thing to do. He started the trust back in 2024. When we were talking, his wife had just passed her real estate broker exam, and she was going to also save all the 1099 income. These numbers are only his numbers, and I updated to 2026 numbers. So saving on federal income taxes, every single state, he's going to be saving, sorry, I had shut it down, open up, at $528,000, federal income taxes for the full year is $112,338. New York State income taxes is $57,552. So for the entire 2026, he started this in 2024, so he didn't pay federal and state income taxes in 2025, and now in 2026, he's going to save $179,890. Per month, that's an additional $14,990. Now, just to let you know, he started the Business Spendthrift Trust to save federal and state income taxes. He now has a beneficial trust because he's also into real estate, because there's a fine line between the two different trusts. Income taxes, business trust. If you're an investor, the beneficial trust. He is building 32 duplexes in North Carolina that is going to be handicap access. He was planning on selling the first 4 duplexes so he could afford this, but he was able to rent them all out. Because he has a beneficial trust, he doesn't have to pay any rental income taxes on any of his properties. Again, he's going to keep his information completely private. All lawsuits become frivolous, so if the renter's dog gets out and bites the mailman, they can't come after the owner. He's going to leave a generation after generation, and he's still too young, but he won't have to pay the Medicare surcharge. This trust comes from England way back when King Henry VIII started the Church of England. Yes, the famous king who chopped off his wife's heads. He went to go tax the lords and ladies of England, and they went back to the 12th century to the Magna Carta and said, oh, no, King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of, that was started by a Harvard law professor 78 years ago, not a single trust has ever been audited, inherited a trust that's going to turn 365 years old in 2026. The United States is only going to turn 250 years old on July 4th. Happy birthday, United States. I just watched the beginning of the Flyers game last night, and I forgot that they always sing God Bless America. I used to live in New Jersey across the river from Philadelphia, so that song's going through my mind today. Our current tax structure went into effect February of 1913, and the only thing it's done is grown and grown and grown and grown since then. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys made sure they could save taxes. Well, if they can save taxes, we can save taxes. When I post this video, I'm going to have a way for you to set up a 30-minute tax breakthrough session with me. I'm going to take you out to a free website, show you the formula for federal taxes, and then we're going to find out how you file your taxes. Do you file single, head of household, where you're divorced and have children living with you, 18 or younger, married filing separately, or married filing jointly? Listen up, ladies and gentlemen. On January 1st of 2025, the IRS quietly changed married filing separately to match single, the most expensive way to file your taxes, from 10% all the way up to 35%. If you're married, even without this business spendthrift trust, please file jointly. You'll save double in the taxes every single year. I want to help as many U.S. investors, U.S. business owners, U.S. franchisee owners, U.S. 1099 income earners, and U.S. How to save federal and state income taxes. This is legal. It's in the IRS Tax Code 643B. If your financial advisor or your CPA says, ooh, the IRS wrote a memo, yes, they did, on August 9th of 2013, where they literally say they do not like IRS Tax Code 643B. They do not like the Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. If your financial advisor or your CPA says this to you, ask them to give you the 15 pages of the memo. On every single page at the bottom, it says this is not tax information. The IRS cannot change the tax code. Only Congress can change the tax code. If you remember 14 years ago when Hillary Clinton debated our current president, and she accused President Trump that he didn't pay taxes, he smirked and said, because I'm intelligent. His father, Frank Trump, started both the Business and Beneficial Spendthrift Trust in 1972 when Frank and Donald Trump got sued by the city of New York for discrimination. Our president is a trust baby because it goes from generation to generation. If you want to leave a legacy, please set up a free 30-minute tax breakthrough session with me. It's just a call to give you an idea. I'll send you an email with all the information. This is legal. It's in the IRS tax code. Learn the secret of the rich. Thank you for watching my video. Have a beautiful day.